Welcome everyone, it's Enrico Janko on Signal. We're powered by the mighty Team Alliance. Just want to show you real quick of just how the boundaries set in the market can be kind of easy to see. And we caught like a transition right here. So you can see it for yourself. You see how it's a clear divisible line in the sand, right? Clearly, the activity up here is one portion of what's going on, and now there's activity going on seemingly below this. We don't know how long this is going to go on. It can go all the way back up into this, but you do see a clear line of demarcation between what has been going on and what is going on currently. So this is how these boxes can help us, because we're now sectioning off parts of the market. We're seeing the strong parts and we're seeing the weaker parts, right? We're able to see all the dominant parts of the party and the weaker parts of the party, right? Right here, obviously, the bulls are more dominant at this time. Right here, they started buying up from 31.45, right? Fairly obvious situation, right? But a lot of times when you don't have anything on here and you're just looking at it, it won't be as obvious. And what won't be as obvious is that the bulls, even though they're strong, pretty strong right here, it might not be as obvious how strong or weak they are right here, because they're not as strong right here, right? They may build up strength and eventually be and show themselves and prove that, but they're not right there. But the bears are not as strong as they seem right here also, right? They may not be as strong as they seem. So this line right here now is forming a resistance, right? It should push down these bulls. But if these bulls are really strong, they'll crack that. They'll bust right through that, right? So these are how we can set up really nice trades, because now all we have to do is time our activity, right? So do we want to say we're going to take this bull right in here? No, because it's not the strongest. We might not want to buy right here. It has to prove that it should be bought there, right? We could buy down here a little bit, a little lower, right? See, right now the market's at 48. We might want to buy at 47, maybe. Preferably 45, right? But you won't be able to buy at 45 unless you bought kind of early, depending on what market you're trading, right? But this is just things to look at. So even if you're doing your Forex, right, look what you got going on for you. You got strong bulls right here, you're saying, right? So maybe you can take this trade right here and say, I'll put my stop, down here somewhere, right behind it, right? Because you could take that type of shot, because that type of shot is going to be your reward can be all the way up here somewhere, right? Even if it fails, your risk was like 2-3 pips is nothing, right? Look, it's coming down, so it has to come down here or whatever. You put your stop right below this right there, right? So if it comes down there and hits a stop, you're fine with it. Boom. But now you can sit there, you can reverse it, and you still have a very, strong trade and a low risk trade. Low risk, high probability trade. Because now if you're saying we turned it around, you can turn it around. You can do that 3 or 4 times until you get it actually correct and still have a beautiful profit. You see what I'm saying? Look how far this just extended out alone, right? That's 9 pips alone. If you lost, 3 times, you probably lost 2 pips, right? So you say you lost 6 pips, but you just gain another 9 right now, so you be at kind of like break even, right? You break even for your trade, and you could keep kind of doing that until you have a clear break in the direction, and the trade just runs all the way, for very high profit return. So that's how you can look at this. It makes it very simple, right? Very simple. And all you have to do now is just keep monitoring where this box is, right, and the price activity, right? Where the box is and the price activity. You monitor that, then you know where the dominant party is, and you always want to trade with the dominant party, right? Even though this says this is a down trend, right? This is going down, right? The dominant party is the bulls at the 41 level, the mid 41, right? That's where they're dominant. Up here, they're not as dominant, right? So our downtrend is just saying up here that we're not going to be as dominant, but down here we are strong. So when the price comes down here, that's the strength meeting the seller's strength, and then they battle it out to find out, who's more stronger. Right now, the bulls are stronger. You see the bulls keep pushing them back once they get down to 41 area. But, look how much selling pressure is going on, though. Look how much selling pressure is going on, right? If a lot of selling pressure goes on and the market moves to this area down here, we know now that we could take this box and just kind of flip it around until what's at this top part is down here. We do a 180 flip, right? Take it, boom, 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 and bring the price action down here, and we got encapsulate all this price action, and we still have those same types of setups, those same types of behaviors, and it's a lot more predictable about what's going on, right? These are ways and perspectives to really hone into and drill into the market, right? Really drill down into the market. We're particularly right now, we're using our BT Online right now. I particularly like this platform just because of the fact it has $2 trades, right? It has $2 trades, and I discovered if we do the turbo option, we kind of get closer to what we have on other platforms, all right? So I like to set this for 1 minute expiry. And you see we have to be above or below this number, right, in the 1 minute time period, right? I've been doing, I did a couple today. I spent probably 18, right, and I profited $6.22 off of 8 trades, So it went kind of back and forth for me, and I won $6. It's cool. I like it because it's kind of like, your scratch offs, but instead of scratch offs and just spending on nothing, you're sitting here actually learning the market, which is crazy. That is really whacking. You know what I'm saying? It's crazy that you're sitting here learning the market and you're playing it with like scratch off money, and once you get good at it, you will keep earning consistently, right? So we just really started using these 1 minute pops right here. So this week we're just simply just testing it out, going through it, right? Before, I didn't even know about it. I was doing the digital, which is more like 15 minutes, right? And then this week, just yesterday, I believe, I saw the turbo option, and I didn't even realize that what it was. And I think the turbo option is crazy because you could now really sketch out your trade ideas and put money in the market, because no one really likes to mess with the demo like that. Because the option pricing and is a little different. So you actually want to always put money in the market and see if you know, what you think is real is real. You know, you want to win, lose. I mean, life, right? So, man, I can't say enough for that, for that reason. You know, just little, you know, little trades, and then you build it up. Like I'm the type. I'm not going to say I'm going to throw in 2,000 and take the trades, right? No, I'll take this from $2 up to $50, then take $50 up to $100, then take $100 up to $1,000, and I'll keep going just like that. That's how I look at things. That's how I operate. Everything is just pure profit because of the skill level, right? So that's what we're trying to get up to, that type of skill level. Now, to get up to that type of skill level, we have to do all the shit that we did like this week, today, Tuesday, Monday, like all the stuff that we did this week. We sat there and watched the behavior of the market, right? We watched the behavior of the market, and then we're putting platforms to it, right? So once we know the behavior, now we know we can go to this platform, we can go to that platform, we go to platform A, B, C, D. We go to any platform and we be able to make money off that platform. That's the important part, right? And you can do this just you, right? Just you and me training, right? That's all you really need to start and get this going. I mean, this is fascinating always to me because I used to read about this when I was a kid, and I remember they used to say that the older Japanese ladies used to trade. And when I was younger, I'm thinking about business and trading, and see the men in the business suits and all that type of thing. And to hear that, like in another culture, they just did this kind of for rent. Like housewives were doing it. I'm like, that's interesting. So it's like anybody could actually, you know, do this and perform at a high level. It just takes some time to figure out the language of the market. And with these zones, once you start really zoning the market out, you can see a lot clearer. I mean, you could just look. You see that the market right now how long has it been respecting that line, right? This is a minute chart, right? So that's about 10, 20, you know what I'm saying? Almost 20 minutes of, you know, just fully respecting that line after it crossed it. All right? So that's what we look at. As far as taking our shots over here, just because it's a $2 trade doesn't mean we should go in willy-nilly and just be gambling, right? Just because it's on a gambling site, you don't have to have the gambler's mentality. The stakes, the risk reward, and how it's all set up, it's kind of set up, you know, to take advantage of the gambler's mentality. If you actually trade and sit and trade off of good setups and have the fortitude, the emotional fortitude to when you win for the day, quit. Like I know that's oh so difficult. That no one's going to be able to kind of do that, and that's why it's great to have this platform. Because when you're on other platforms and you're playing for more money and you don't have that what it takes to just stop, you end up losing lots and lots and lots of money. Like I wish when I first learned about this that about, you know, binary options in general, that I knew about a site like this. Because learning how to do what I do well has took, money, time, whatever sacrifice that you could think of. I probably had to do it to learn this, and to learn it for real, not kind of learn it where you know the vernacular and all the words and all that, and you could impress someone that really doesn't know. No, I'm talking about know it to the point where you pulling out money all the time. You in front of people, showing them how to rock this. So, teaching people, taught hundreds of people now, how to actually do these options. So it's man, this is just crazy when you think about it. So we're not gonna just be in here just like I said, just wilding, because you can't be like that. It's like the robots kind of are taking over, right? So you're trading a lot of time against bots. Look, we're at the 1 minute level. You can't think faster than a bot at the 1 minute level. You can't process information as fast as a bot can at the 1 minute level at all. Like, you can't even try it. So instead of doing that, you have to have some sound reasoning to be in the market. You have to know why the bots are doing what they are doing, right? Because you don't want to you're not really trying to outsmart them. You're trying to be a part of them. You're trying to kind of assimilate and do what the most dominant bots in the market are doing. You see how crazy this is? A lot of times I'm not even trading against people no more. I'm trading against bots that are buying and selling in huge quantities, and I'm just a part of some quantity that some bot is, buying and selling. So you want to be part of the winning squad, the most dominant side when you're trading. But to my original point, here's how we then just flip this over if we like so, right? And now here's all the previous the present activity kind of. Now we see possibly that we have strong bulls at 41 since they're buying 41 up high, right? They're buying 41 at the highest, right? So markets that usually don't want to buy at the high unless they can move the market further, right? They usually don't want to buy something all the way high unless they can move it further. I mean, sometimes it will happen because the bots are not perfect either. They do what they do just based on statistics. So when the statistic is skewed one way or another way, then they're going to do what they're just instructed to do, whether it's going to be a win or loss. Of course, in their mathematics, it all comes out. It's all in the wash for them. It's, they already, factored it in that there are going to be times when the bot and the statistics are going to be skewed. That's just mathematics, statistics, a bell curve, all that type of information that you learned in school probably and never used. Half of this, all of this is a lot of math really. So that's why we don't even get involved in that. That's why we don't get involved with the news, the politics, and all of that. All we just look at is what the price is doing, right? What is the price doing? How is it behaving? Where is it stopping at, right? What's it do when it gets to certain price levels? We spend all our time doing that. The more time you spend doing that, the less time you're going to spend losing money, right? So study is important. Learning the behavior is important. Most people, when they study, and they're studying the wrong thing. They're studying how maybe some indicator is reacting to the market, or they're studying how some fundamental news is going to move the market. Or, a lot of other things. They're studying Fibonacci and angles and all of these things. And all of them might have some relevance. But the fact is, do they have enough relevance that they work all the time to give you a consistent edge in the market? A consistent edge. Now, you have to ask, what is an edge? To have an edge, you have to know something that other people don't. You got to know something that the other people don't. If I don't know something you don't know, then I don't have an edge on you in whatever particular game we play. Right? Usually in Monopoly or something like that. Right? Is that more so a game of chance, or is it a game of skill? Monopoly. If we all have the same level, we all know the rules and everything of the game, right? What would differentiate a player from another player? With one player, is there a way to say if there's a good Monopoly player and a bad Monopoly player? It comes up to how much money is at the end of the game, right? So it's all done by a roll of dice. So it's all done by a roll of dice. Is the market just a roll of dice? That's what people have tried to figure out for many years, decades, hundreds of years. Is it all just a roll of dice? And in a way, it is all just a roll of dice, because any time on the market is just a 50-50 shot. So yeah, it sort of is a roll of the dice. But at certain portions of time, certain times in the market, your chances are more like 65-70%. And at those shots are the ones you want to take. You want to leave all the 50-50s alone. You only want to find the ones that are like, 65-70. So that's our job, sitting around separating the good stuff from the junk continually. Just continually separating the good stuff from the junk. As you go along with your journey with this price action, you're going to find out your personality and the trades you feel more comfortable with, and that's going to then tell you which platform that you're going to perform the best on. Right? Once you got all this information, there's a lot of internal information. To be consistent in the market, you have to be comfortable within yourself and comfortable within the framework that you're using. And the only way you can ever become comfortable is to have trust. Trust. You have to have trust. And a lot of times, most people, you'd be surprised, don't trust themselves. Right? Because they haven't accomplished enough in their minds to trust themselves. Right? So if you can't trust yourself, it's hard to get to the point where you trust some system or something outside yourself. So first, this is why we sit in the market and just really learn the behaviors of it first, because that's going to give us that comfortable feeling. That's going to have us trust what we see in the market that is going on. If we can start trusting that, then we can start trusting the decisions that we're going to make in the market. Trust those decisions. Now we begin to trust ourselves. All of that brings us to a level of confidence. And the confidence is what leads to consistency, because you're confident in what you're doing. You have to be confident enough to actually pull the trigger. You have to be confident enough to say, oh, that's my trade, and I'm going in now. Right? So all that has to be done with familiarity. You got to get familiar. We have to get real familiar with what the behavior of the market is. If we're not familiar with what's going on, we'll never be comfortable. Right? We'll never be comfortable. I was just thinking about just moving that down at the moment. As I said before many times, these boxes are not, they're not surgically placed. They're done by eyeballing what the market is. Anything should be, if it's not obvious, then you really shouldn't, that's not the box, right? The box, because all the traders are seeing the obvious things. So when multitudes of people, of traders, see the obvious, it kind of makes it a self-fulfilling prophecy. So all these traders see that, oh, this line is the line. Once they see this line of demarcation in the market, they're also going to have a reaction to it. And, that most of the time is going to be a typical reaction. It's going to be like a typical reaction. Of course, most traders are typical.